Politics and the financial market can have a direct correlation. The past presidential election, everyone watching the stock market was nervous, not knowing what to expect depending on the outcome. Garrison III with Preservation Financial Group is here to give us some insight on the stock market this past year. Davis, thank you so much for being here.
Thanks for having me.
Yes, so let's talk about the past year and a half following the presidential election. The stock market was definitely fluctuating throughout the presidential election, and then of course when Donald Trump won presidency. Tell me a little bit about the stock market and kind of what happened there.
Well, it was anticipated that the market would fall off a cliff if President Trump were elected. As an example, a gentleman, David Littell, a 64-year-old retirement expert, uncharacteristically sold off all of his stock right before the election. And while stock markets defied Wall Street's expectations, they're at an all-time high right now. It's been an 8.5-year bull market. And there have been 25 recessions since 1900. They happen on average every 5 to 7 years. So this bull market is a bit long in the teeth. It's going to correct. I can tell you that with certainty. Don't know why, when it's going to happen. With North Korea, things like that, there's a lot of concern worldwide. A September 25th issue of Time magazine addresses the nervousness of the retirees and pre-retirees, and how they are going to protect the gains from this 8.5-year bull market from the correction when it comes. And normally people near retirement have been steered to bonds. Bonds are very unstable right now. Bonds are a bubble right now. The 30-year Treasury is yielding 2.7% right now, roughly. And so that's not really a good theme anymore. One thing that we specialize in is guaranteed lifetime income. And over half of the people near retirement or in retirement are concerned with outliving their life savings. So we have what are called income annuities, and we use an old accounting rule called the Rule of 100 to determine how much of their assets they need to put in income annuities, which guarantee a lifetime income for the husband and spouse, vice versa, whatever. The Rule of 100, if you're 65 years old, subtract 65 from 100, that leaves 35%.
Right.
Put 65% in a stable, guaranteed product, and put the other 35% in the market to accentuate
so you're not putting all your eggs in one basket.
Exactly. The only trouble is that although a lot of people, surveys show that a lot of people really want guaranteed income for life, annuities appears to be a dirty word with them. TIAA CREF did a survey, and only 10% of retirees or pre-retirees have purchased income annuities. As an example, against the 30-year Treasury bond, as an example, a 65-year-old retiree, if he had $1 million and put it into an income annuity, it would pay him $5,444 a month for as long as he lived.
And that's just money being fueled back into your life, right?
Yes.
Yeah.
And if he lived 30 years in retirement, which is not uncommon, we're planning on 40 years of retirement for people now. But if he lived for 30 years in retirement, that $5,444 a month, it would equate to $1.9 million payout
Wow.
off of a $1 million investment.
Well, some great advice, Davis. We appreciate you coming in and telling us a little bit about it. A lot of people are definitely interested in this topic, so make sure you stop by Preservation Financial Group in Johnson City. You can also give them a call if you have any questions or if you want to stop by and talk to Davis. Call them today.